Hello everyone, welcome back to the channel. Just a quick disclaimer before we begin. This video is for information and educational purpose only. Please do your own research or consult a professional before making any decision based on this content. Thank you.
Today, we are examining Opendoor Technologies, identified by its ticker symbol Open, a technology-driven platform set on transforming the home buying and selling process. Opendoor functions as an iBuyer, offering swift cash proposals to homeowners, purchasing properties, managing required renovations or improvements, and subsequently reselling them. Additionally, it provides MLS listings, title and escrow services, as well as mortgage and insurance solutions, effectively attempting to consolidate many aspects of the residential real estate transaction process. Over the last 10 years, Opendoor has broadened its reach into numerous U.S. markets while enhancing its technological framework to facilitate pricing strategies, transaction management, and logistical tasks. The company believes that the advantages of speed and certainty, allowing sales without showings or uncertainty regarding listings, can attract sufficient homeowners to achieve growth. Nevertheless, this approach requires significant capital. Opendoor maintains inventory, incurs holding expenses, invests in repairs, and faces the risks associated with fluctuations in property values, high interest rates, and a lack of liquidity in slow-moving markets. On the financial front, Open has experienced considerable losses historically, with profitability remaining quite a way off. Its revenue has varied greatly, with some years seeing billions in home sales but also net losses reaching hundreds of millions. One analyst pointed out that its net loss over the past year was more than $368 million, highlighting the high costs of maintaining liquidity and expanding inventory operations. In 2025, the company has encountered challenges due to a sluggish housing market and elevated mortgage rates, which hinder transaction volume and raise financing expenses. Recently, there has been a significant surge in interest surrounding Open. The stock price has risen sharply, as retail investors have treated it as a meme stock, influenced partially by calls for the return of co-founders, shifts in leadership, and a revitalized narrative about revolutionizing real estate technology. Co-founders Keith Rabois and Eric Wu have recently rejoined the board, while Kaz Najatian, formerly the COO at Shopify, has been appointed CEO. These actions have sparked renewed optimism and volatility. Short interest remains high, and institutional involvement is on the rise, further intensifying sharp intraday fluctuations. In conclusion, Opendoor represents a speculative investment characterized by high volatility in the intersection of real estate and technology. The potential for growth depends on its capability to streamline operations, manage capital costs effectively, scale transactions profitably, and realize its goal of simplifying the home trading process. However, significant risks persist. Fluctuations in housing markets, financing pressures, execution difficulties, and shifts in sentiment could all undermine the enthusiasm surrounding the company.